Hey guys, welcome back. Hope you had a good week in the market, a good Friday. Here's our long term. This was today, pretty flat today. That's good. Market came down some. Been pretty focused on GameStop, which we're going to go over here in just a minute. So it's kind of a rotation into value lately, out of growth into value. Still kind of happening, as you can see even here with my account. The value stuff is kind of holding up or going up, and growth is kind of settling down. On the week, let's see. I haven't even checked. We're up $3 grand this week. I don't even know what that's technically on. I think actually a lot of that's GameStop. There you go. GameStop's up. We're up this week on GameStop on our long term. There was other stuff up from this week too, though. But yeah, looking good on the long term. Shout out the long term. So that's where we're on the long term. And here we are with GME. GME, like I was talking to you guys about, it consolidated. I kind of thought it might consolidate and slowly melt up today. And it did. It did just that. It was starting to run up. And then I think the shorts kind of held it back down, suppressed it a bit. This whole bit right here. Because this was starting to create a gamma squeeze probably. Because it was getting close to that 300 mark. And there was a lot of calls. Thousands of calls at the 300 strike. So they were they only could short it on the uptick, so that's why I was much slower. But yeah, they kind of kept it down, brought it down, and yeah, there we go. That's basically another day of consolidation, which is really good for the options. If you own options right now that are naked, that have a short amount of time, and you bought them since it's been above, say, 100, sorry, because those options they've lost value the last 2 days. That's kind of the way it goes. For me, that doesn't have it. It was good. I scaled in and scaled in with one. So here's a little, here's a option that I bought. This is 600 strike expiring next Friday. This is actually showing the price of the option, which is kind of cool. So if you look right here, when we had that crazy short ladder attack 2 days ago, the stock price got down to 177. And this option, the cheapest it got was, they say 1,000, but really 1,200 is all you could have gotten. It was halted and stuff, so probably around 1,200. And then if you look, just with theta and time decay, look at just melting down because of the consolidation we've had these last 2 days. This is 312. This was yesterday, and it just started to plummet. Or no, this is today. I'm sorry. Here's 311. So kind of stayed flatter yesterday, and then today it's really just started losing value. But look, the stock price though, we're at 265. Stock price here was 174, and that contract lost value. I paid $800, $850 for this same contract that you would have to pay $1,200 for when the stock price was here. So to kind of show you how options work, this is why I wouldn't mess with options if you have not before. I wouldn't get your feet wet with GameStop and options. It's something you need to learn and go real slow with and take your time. There's good rules you can set for options, like don't buy a call or put with a delta less than 0.2. Don't open up a call or a put with or buy a call or a put with IV higher than 150 or 100 or 80 or whatever thresholds you want to set. That's kind of your own thing. Same with delta. But yeah, I think 150, less than 150, higher than 0.2, has to have open interest of, I don't know, 500. You can kind of set parameters and then kind of stick to that and just see how options work and go from there. But it's, yeah, risky on here. This would have been a great time to buy shares, because these shares didn't lose value. They only gained in value. But the option from here to there lost value. So that brings me to my next point. So now that we see that consolidation really kills option premium, which is what you're paying when you pay for an option, you're paying a premium. And so yeah, I was able to get that call. If next week consolidates even tighter and stays flat, that'll be really good. I mean, that's really what we want for this stock to keep going. It needs to be, we want it to be less volatile in these higher ranges to build a floor to keep going higher. You can't just moon. It doesn't work like that. If it does, it's extremely volatile and just shoot back down, and no one will be able to do anything. It'll just be halted the entire time. But as you can see, hedge funds, whoever, it gets pretty volatile past this 300 mark. They're trying to keep it below that 300 mark. And I think even today what was happening was that, because it was starting to run up. We're starting to get a little bit of a gamma squeeze. So there's thousands of call contracts that would have been in the money and market makers were starting maybe to add to this run because they just stay delta neutral, which watch my other video I uploaded this morning. I talk about delta neutral and gamma squeezes. They were having to buy shares to stay delta neutral to make sure that those 300 calls they could cover in case it expired at 300. So I think the shorts kind of, they suppressed that. It wasn't a short ladder attack. They can't really do that. They can still do it, but just on uptick. So they were kind of, I think they kind of got suppressed from that, but that's fine. This is kind of the consolidation we called out. We're green on the day. And yeah, we kind of said I think we'll melt up a little bit and then kind of consolidate. And yeah, we did just that. So next week might just consolidate. However, next week might be crazy. We're getting stimulus checks this weekend. I know for some they are, and maybe next week. And I feel like that's going to help be a catalyst for GME. Last week, if you look, it was Friday. So this was the Friday. We kind of stayed in this nice range, climbing up all week, 3-4% gains almost each day. Here's a Friday. And then Monday it shot up and started making a new kind of trajectory, this steep one right here. So just in case that's the case, I did that naked call for next Friday in case Monday it's already got a lot of premium on it. So, and it might not. Monday, Tuesday, it could just stay flat. We could even get short ladder attacks on Monday, Tuesday because they're not on the short seller restriction. I'm kind of predicting it's going to probably run up on Monday and probably get a short ladder attack. Maybe not, but I feel like once it gets over 300 anyways, it's going to start getting attacked. But yeah, we'll see. I don't think Monday will be it could consolidate. I don't feel like it will. But if it does, that's fine. Keeps consolidating flat, that's good. That brings me to my next point. When we made 14,000% on a call contract, it was after this. So in the market, when you want to act and make moves is when no one's looking at it, when there's no hype, when no one's talking about it. You want to do it when the market's quiet about it. That's when you make your moves. That's when you do your preparation. You don't do it once it's all hyped and everyone's talking about it. It's all awesome. At least, especially now with options. With shares, it's not as big of a deal because there's no expiration on them. You don't have leverage. So DFV, he was talking about GME for years, since 2019, and he was preparing from back then. He saw the potential and just kind of kept building a position out. It was quiet then. Slowly people started to see it and it blew up. On a much shorter scale, I'll show you what I did. Because in January, there was this. I did a lot of research. I didn't lose all my money back here because I knew high IV can't do it. I made some money, but not what I was, I made some, but not much. I just kind of observed, and that's what you have to do. You have to have patience. Stock market is a transfer of wealth from the patient from the impatient to the patient. The stock market is the transfer of wealth from the impatient to the patient. Thank you, Warren Buffett. So I was patient back here and didn't lose all my money, so had enough money to fight and trade another day. And that brings us up to here. Selling off, I'm researching. I'm learning that I don't think that was a short squeeze. I don't think they covered. That could have been a gamma squeeze. I don't think this thing's over. So GME is on my radar. I'm not doing anything with it. I'm just keeping it on my radar, waiting for a reversal, positive price action indicators. Shout out Zip Trader on YouTube. I've kind of go off his indicators on what reversal is, candlesticks, price action, indicate these technical analysis, whatever this stuff. So on this day, this was 23rd of February. Here's the 24th. I'll show you guys really quick. So it had been going down pretty much every day and then kind of stayed flat, found a nice floor. This day went up like 8%. That was the 24th. So if you look, even on the 23rd, I had a video about it. Market sell off, GME held well, and that was a bullish sign also. GME was just flat through this, and the market had been really correcting these days. So 23rd, and then the 24th, it was up like 8%. And this was the first green day we really had on it for a while. So right here, 24th, 10:20 a.m. opened up a put credit spread on GME for this Friday, 42.41. Look at GME go. So that's a bullish position. February 24th. That's a capped bullish position. So I'm capped at how much I can make on it. I didn't know what was going to happen. So I just, I was very safe. It was a very small amount of money. And I opened it up at 10:20, which was on this first candle, this first hourly candle. And this green candle above the 9 moving average. MACD crossed over. I was like, all right, it looks good. Maybe this is it. And this is about to be a cross. What's it called? Golden cross right up here, where the 9 crosses over the 180, or short-term average crosses over the long-term moving average. So yeah, open up that play, tweet about it. If you don't have Twitter, you don't like Twitter, I don't blame you. I'm using Twitter just because I don't have enough subs on YouTube to notify YouTube. And when I do, I probably won't be updating it like I do Twitter, just because it's probably not what people on YouTube really want to be notified on, and these little up-to-date things. Anyways, you guys let me know and sub up so I can notify you on YouTube also. Picked up a weekly call on GME, just one, haha, $67 strike. This thing cost me 90 bucks, I believe. I can look back at it. $67 strike, expired on Friday, and this was at 11:11 a.m. So that was right here on this candle. I saw a nice big green candle. I saw it setting up a bull flag. I'm like, all right, let's see what happens. Let's get some naked exposure, basically unlimited gain potential. And so I did. I think it cost me 100 bucks. I was like, that's a lot. That's a lot for me to spend on an option. And I've got almost 100 grand in the stock market right now. For me to spend $100 on an option that expires that week, I don't do that. Just to put that into perspective, guys. If you're spending like, oh, let's spend $1,500 on a strike, way out of the money that expires on Friday. That's just insane. Unless you have millions in the market, that's not good risk management. And that's how you stay in the market, and that's how you make money in the market, and that's how you get wealthy. You got to have risk management. Here we go. Rant's over. In a long term. So I opened up that one, and then kept updating. 11:15. I opened up another one. Or no, let's just talk about Rocket. Yeah, Rocket was also doing like a gamma squeeze then, I think, which was really weird. Got 2 calls for next week. So these are naked, 200. And then I start to think this might go crazy. So I got way higher out of the money. And at that point, that was super far out of the money. I was at 11:47. So that was right here on this candle somewhere. And 200 strike. I was like, there's no way. This was at $50 at that point. And it had just been flat. No one cared about it. People hated GME. They're like, stupid GME. I lost all this money on it. Back when the IV was 2,000%, and I was buying calls when the strike was at $400. Yeah, they hated it. It was just flat. But you had to be patient. You got to wait. You got to wait for the play. Sometimes the play is not for you. You got to get something else. So I got 2 of those calls for 200, and both of these plays were 14,000% plays. I think the 200 strike actually might not have been weekly. Yeah, this one was a 14,000. This one I can't remember, and I can look back at the trades. But if you do the math, there's a $90 call. It turned into $14,000. Literally, the account was up. I was up like $20,000, $30,000 on those plays. I didn't sell out of all of them. I thought we were gonna go crazy. We did make, I think after that was over like 10, 12,000 on like a $200 investment. Just because we were patient, and then we went on our conviction, and not with a whole lot. Yeah, of course I wish I would have dumped way more into it, but every time you have this feeling or this conviction, you're watching stuff, you can't just dump a bunch into it. That's not good risk management. That's how you quickly blow up an account. So little here, little there, good decisions, and then you can keep going. And so yeah, that's what we did. So to let you kind of digest that a little bit, it came up, hit 200 after hours. This day I was freaking out. I was listening to all my music. I'm like, this is crazy. It's the biggest plays I've ever done. And I only put $90 into one of them and like 200 into the other one. And this account's up. We were up. What were we even at? Yeah, we were over 50,000 on this account, which is crazy. It's at 30 now. It was over 50. Like, why didn't you sell? Yeah, if this was going to $1,000 a share, I would have made a lot more. That's why I didn't sell. I sold 2 of them. I actually rolled them up. And yeah, anyways, we made good money on that. And now I'm trying to be patient. We've had this grind up here. So this time the IV didn't really drop much, just because it kind of kept coming up. The stock price was already pretty high. It really needs longer to consolidate. However, you did get pretty good price action here. This jump was not like the jump back there though. And then we kind of trade up in this range. All this to say that this consolidating, getting tight, this is a good thing. If GME next week just gets real tight and in a tight little range, and everyone's getting like, oh, this is stupid, this stock just stays around 270, I'm only up 200% on my shares, I'm selling these stupid things, I want to go buy Tilray. If that happens, that's what you want. Keep an eye out. Keep your alert. Once it starts getting settled down, that's when you start buying calls. Not then, but once you start seeing positive movement, that's when you start buying. If it starts getting tight, that's when you start selling. If it starts getting real tight, that's when you start buying. If it starts getting real tight, that's when you start selling. If it starts getting real tight, that's when you start buying. If it starts getting real tight, that's when you start selling. price action before anybody else gets hyped on it. I don't think this is going to do that anymore, unfortunately, but for the future, if you ever have that opportunity, because this is already too high, there's already way too many eyeballs on it. I think it's going to stay at this level. I don't think it's going to just mellow out at this level. So I think it's going to come up on Monday. Stimulus money coming in. It's not on the short sell restriction list for Monday, so it could have these big ladder attacks. Once it goes over 300-ish, it gets really volatile. So it's good that we're building this floor at like 250, 260. If next week, I wanted exposure, so I got one naked call for next week, basically because in case Monday and Tuesday are crazy, I wanted exposure for that. If it does consolidate, that call that I bought is going to lose value quickly. And yeah, that's kind of what you have to do. I'm probably not going to get a 14,000% play on that unless if this goes to like 5,000 by next week. But, you know, could be good. And if it consolidates, I will then just wait. If I start to see something different, positive price action, confirmation, then I will average in or, you know, buy up more. And by that point, calls will be a little bit cheaper, as you saw on this chart, with the time on these calls was this high of IV and these short expirations. I mean, these are really short expirations. Typically when I do options contracts, I'll do like a month out at least. So given that this IV is so high, I'm trying not to do that far out and pay that much. So that's GME, guys. I could go on a long time talking about GME. This is all I've been really looking at. It's crazy. But yeah, this nice floor that we built here, this is good. Next week, you know, who knows where it's going to be. But I mean, the fact that we're at a floor up here, if you look back in January, this was crazy. Let's see, 250 back in January was like, it was so volatile around here. It wasn't like mellow. This is like a somewhat mellow day at 320, but not really. The day before was at 140. Yeah, it was bounced around so much. We've been at 250 ish for a couple days now. That's awesome. So yeah, this is a good thing. It's gotta slowly come up. Can't do it all in one day. Wow, why did you do that? So yeah, $1,000 a share by next week. I don't know. I mean, this is setting up nice though. This is actually a big bull flag, kind of. This is like the pole and then the flag. It looks weird because these are huge candles. But yeah, so that's my GME thesis for next week. I have a naked call. We've got a ton of exposure with debit spreads too. If you guys don't know options, don't mess with it on GME. Learn it on something. You can have rules for yourself. You can say, I'm not going to buy an option that's lower than 0.20 delta. What that means is basically right here. So the delta's over here. This is 0.22 delta, 0.2. Watch my gamma squeeze video explained. I uploaded it this morning. It says gamma squeeze. But yeah, you can make rules like that. And then I'm not going to open up an option that has, or buy a call or a put that has IV higher than say 100. Those are pretty good rules. And then also ones that don't have more than, or have to have more than 500 open interest or volume. Basically, so there's liquidity and get in and out of it. So you can set up rules like that if you're learning options. I wouldn't be buying options right now on GME though. Crazy quick way to lose money. Shares, yeah, those you can hold forever, and I think it'll be good. So long term, gotta have a long term. Let me show you what we did today on here. Weeble's looking good though. We're up 11,300 on this account. These are just shares actually, just holding shares. Nice. And a lot of it's GME, of course. Some of our other stuff is kind of came out of the hole today. I bought one Tilray option. I guess Cuomo was talking about legalizing weed or something, and this was kind of a little $30 YOLO, just in case it went crazy. We've got the shares though too. So these are all down from the last month of everything selling off 30%. But GME's brought this one up with the shares. And yeah, so this account looks good. Our TD Ameritrade looks good. I bought 10 more shares on the dip yesterday, the 10% dip that I called out on our Twitter also. I said, if this thing dips 10%, I'm pretty certain it's for them so that they trigger a short seller restriction, the hedge funds that are long, and I'm going to buy on that dip because I don't think it's going to keep going. Sure enough, the thesis was correct. GME dipped 10% yesterday, got in the short seller restriction list today. That was right here. I bought here, and I said it probably won't. If you watch my video, I said it probably won't be this cheap of a price for the rest of this week. That was 233. Sure enough, that was the cheapest it was for the rest of the week. Next week could be cheaper. It could be. We'll see. If we get a ladder attack on Monday, and if it's not really high, it might drop more. As this thing gets above 300, it's going to get volatile. Can't stop talking about GME. Let me show you what we do on here today. So I got out of the debit and credit spreads on GME today. Unfortunately, of course, GME didn't expire above or close above 350 or 330. I kind of needed that to happen for these to expire in the money. That would have been sick. It would have been $4,000. Instead, I think I lost like $600-700 on it, which is a huge loss. But the upside potential that I see with GME, and I'm still kind of playing with house money with this. You know, we're up $7,000 or so still on GME stuff. And then I opened up that one naked call for next week. That's 600, which is right here. Cost $850. And then I bought to cover my covered call on Airbnb because Airbnb is running up, and we had a 200 call on it, and it's 206. So I lost like $80 on that, but I'll make it back in the shares. Once Airbnb is higher, I will sell another covered call because it looks like it's, yeah, it looks pretty strong. Sort of, although it could be kind of at the top of this range and start to come down. I don't know. The chart's not speaking to me too much. I mean, it could be bullish or bearish. It's kind of going with the market right now, kind of an unnatural bit because of the stimulus. It's kind of made everything move unnaturally. See the SPY right here, it should have stayed in this range of correcting, but this is all just stimulus excitement. Long term, we didn't do anything on long term though. Looks nice. Oh, weekly recap. Long term up $3,000 this week. How did that happen? I think a lot of that's GME. I think we're up like on these 10 shares in here, we're up 1,500. But that didn't all come this week. Some of that's maybe Tesla. Tesla's come up a lot this week. Yeah, we just kind of rebounded from last week. It's because last week was a big dip. But yeah, $3,000 this week. Didn't have to do anything. Just bought and hold on stocks I think will be here in 10 years and stocks I like or stocks I use. And that's the beauty of the long term. That's all I got for you guys. Have a good weekend. Thanks so much for watching. Follow me on Twitter at HappyMoneyYT. Sub up, like up, comment down. Happy Money sticks around. The stock market is the transfer of wealth from the impatient to the patient. Thank you, Warren Buffett. We will see you maybe this weekend, maybe Monday. We'll see you about on Monday when GME is opening up at $300 a share, on its way up to $500 on Monday. Peace out.